I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
Hey everyone, thanks for tuning in. This video, I'm going to highlight one reason among many why investors prefer Home Depot stock over Lowe's stock. Now, when investors prefer one stock over another, it's rarely only because of one thing. So take this one thing in context of a bigger picture where investors prefer Home Depot stock. So with that being said, let me jump into the one thing that I'm talking about, and that is the inventory turnover ratio, which is what I have pulled up in this chart here. So what you can see is the inventory turnover ratio of Home Depot and Lowe's over the last decade. And according to this metric, you can see Home Depot with a wide lead over Lowe's. That's been consistent for the last decade. So it wasn't like Home Depot beat Lowe's in this metric one time over the last year, or it's fluctuated between Home Depot and Lowe's taking the lead over the last decade. That's not the case. Home Depot consistently beating Lowe's in this metric over the last decade. So, why is this metric important? Why is the inventory turnover metric important? So, first, let me define the inventory turnover. This measures the cost of goods sold divided by the average inventory level. Now, with this metric, with the number being higher, this means that Home Depot is turning over inventory more often than Lowe's. In other words, it's using its space more effectively than Lowe's, right? It's bringing in products on its shelf, it's moving off its shelf more often than that's happening at Lowe's, which, in my opinion, is a critical metric that defines brick and mortar retailers. Right? When I'm looking at Lowe's, Home Depot, Target, Macy's, Costco, Walmart, Nordstrom, I'm looking at this metric because this is what the company is in business for. This is the core of the business. You're acquiring things that you think your customers will want, bringing them, presenting them to your customers, and selling them to your customers, and doing this consistently over and over again over time really shows me how good of a merchant you are, how good you understand your customers, how good you are at securing these materials, these goods, right? Can you get them? Can you negotiate prices? Can you secure that inventory? Logistics, can you bring them into your store in a timely manner when your customers want them? So there's a lot that this says about a company's performance, the inventory turnover ratio, right? So this to me highlights a lot about a company and its ability to serve its customers. And you can see Home Depot consistently well ahead of Lowe's, averaging over 7.2 for the better part of the last decade, and Lowe's barely ever breaking over 6, while Home Depot consistently over 7, especially after 2016. And then each Home Depot and Lowe's experienced boom times during the pandemic. Home improvement was surprisingly a popular activity during the pandemic. Few analysts were expecting that initially, that this would become a popular activity, but it did, and they both responded well, I will say. Lowe's did a good job as well, but Home Depot just did much better, as you can see here, their turnover ratio jumping higher. Recently, they've both experienced the turnaround of that, right? People spent a lot of money and they completed a lot of projects around the house. So now that, economies are reopening, people are reprioritizing their time and money. And so you're seeing each of them experience this down. But still, Home Depot well ahead of Lowe's, 6.179 inventory turnover compared to Lowe's at 4.926 inventory turnover. Now, I hope the question that's coming up in your minds at this point is, well, yeah, it's easier to sell things more frequently if you're willing to sacrifice a lower profit margin, right? If I'm willing to sell you things at lower prices and hurt and sacrifice my margins, then of course I can sell things more often. And you can see this when I do videos on Costco and I compare Costco with Target and Walmart, you'll see Costco has a greater inventory turnover, but Costco is sacrificing its profit margin in order to achieve that. Costco has some of the lowest profit margins in the industry. But interestingly enough, if I compare Home Depot and Lowe's, and this is their operating profit margin, what you'll see is Home Depot is crushing Lowe's in this metric as well. So not only is Home Depot selling items, turning over inventory more frequently than Lowe's, it's doing it while also generating higher operating profitability, which is an incredibly difficult feat to master, which is incredibly difficult, right? Because customers, you can sell them more things if you're willing to sacrifice profits. But that's not the case here. Home Depot selling more things without sacrificing margins, without sacrificing margins. And again, this exemplifies the point I was making in the previous slide, in that this shows just how good of a retailer, of a merchant Home Depot is when you compare it with Lowe's, because it's not sacrificing margins. It's doing so by running its business effectively, by understanding its customers, by knowing what they want, when they want it, where to place the items, how much of the items to get, and so on and so on. By doing all of those things, that's what's improving its inventory turnover. That's what's keeping its profit margins. And it's not taking the easy way out and saying, let's just lower prices and sell more things, right? It's not doing that. So this is why I think, this is one reason why I think investors prefer Home Depot over Lowe's. And one way you can see which company investors prefer is by looking at the forward price to earnings ratio or other valuation metrics, and it'll show you investors are willing to pay a premium price for one company over another. And this is evident in these two because they're so comparable. Very few times you can find two companies that are so closely related, but with Home Depot and Lowe's, you can get that. They're both primarily home improvement retailers. They both primarily operate in the same lines of business, in the same regions, and so on. And so with this, you can see investors are willing to pay a forward price to earnings of 18.71 for Home Depot stock, while only willing to pay forward price to earnings of 14.28 for Lowe's stock. And this is what I mean when I say investors prefer Home Depot stock over Lowe's. You can see that they prefer them by looking at the valuation. They're willing to pay a higher price for Home Depot stock compared to Lowe's stock. Now, I haven't mentioned a multitude of other reasons why investors might prefer Home Depot over Lowe's. I just wanted to make this one point and highlight the inventory turnover, how good Home Depot is in that regard compared to Lowe's.